Well, we're going to take another look at our ag commodity trade here on a Monday. Thanks for joining us. I'm Marlin Bohling. I am joined in studio by none other than Chris Swift of Swift Trading Incorporated. He's based in Nashville, not very far away. How are you?
Doing great, Marlin. How are you this morning?
Thanks for coming in.
Yes, sir. Absolutely.
I'm doing fine. Appreciate that. Let's take a look at our grain trade and see if we have gotten any traction since the open, where we did not have any. Let's take a look now. On the corn, we are still weaker here, Chris, and on the low of the day. 368. Well, now it's 368 and a quarter. So we're down 3. We just one tick off of the low of the day. March down 3 and a quarter at 377 and a half, and that is its daily low. Let's look at the soybean trade, and so far we have January down 3 and a quarter at 915. Got as low as 913 and a half in the early going here. March down 3 and a half at 927 and a quarter. And if you look at the wheat market in this particular update, we have December down a penny and a half at 501 and a quarter. That's in Chicago. In Kansas City, we have December currently trading 2 lower. We're at 415. And Minneapolis December is actually unchanged at 503 and 3/4 right now. Overnight, we had an export sale of corn announced, and it was about 132,000 tons of corn to unknown destinations. A little bit of debate here, Chris, over whether we actually had soybean cancellations or not. Some say, yes, we had 180,000 tons canceled, and some say, no, that really didn't happen, so now we don't know. We're keeping an eye out for that.
Sure.
Okay, a lot of weakness nonetheless in the grain trade so far today.
It is.
What's going on? Is it harvest pressure? Is it China trade negotiations failing?
I think it is a combination of everything. Most of the soybeans have already been harvested. We saw last crop progress report where we had quite a bit of the soybean market or soybean crop already harvested. Now we're waiting to see what the corn is and see if they can catch up on the corn. Looks like there's some favorable weather coming in to be able to do that, and there's just no demand out there. We really need some demand from around the world. We could use some ethanol demand, and we just don't seem to have a great big demand for any of this right now.
Now that's interesting you say that. We just announced 132,000 tons of corn sold, and
corn
you say
down
there's no
3
demand out
yeah,
there. But in the bigger scheme, it's way behind, right?
Well, it is, because whenever the market does not react to friendly news in the manner that you would think of it, then there is something overbearing in the opposite side of it that's keeping it from.
All right, South America, production going okay so far? I mean,
as
for
far
getting
as I
the new
know,
crop in here?
I think that they will probably plant a few more acres of soybeans down there, maybe a couple more acres of corn. But as far as I know, they're right in line.
What's the latest on the trade negotiations here? It sounds overnight like people are a little more pessimistic about getting something done. I know the producers are just fit to be tied about this yin and yang thing here going on.
And I've tried several different times to make something of it, and I cannot. I really can't. When we get into the meat section, I can tell you a couple of things that I am seeing that is being impacted by the tariffs. But other than that, I don't know. I just really don't.
All right. Are you optimistic about wheat anytime?
Maybe a little bit. I'd like to see some snow cover on the wheat to get it covered up for the winter. But without any snow covered on it, it's always susceptible to some of these hard cold blasts that are coming down from the north.
Okay, we'll pause right here, and then we'll come back and we'll talk livestock here in just a little bit. Our guest is Chris Swift. He's right here in the studio with us, and we will come back in a moment and look at cattle and hogs next.
America's most important network.
Let us resume our talk with Chris Swift of Swift Trading Incorporated. He is based in Nashville. He's here visiting with us live on the set. As we look at our livestock trade, let's go ahead and look at futures first, and then we'll talk about it a little bit. On the live cattle market in Chicago, we are mixed. We have December down 2 cents. In other words, one tick. Now it goes down 7 as I say that. It's at 119.03. February up 3 cents or 1 tick. We're at 125 even, and April up 15 cents at 126.22. So it's come off of its earlier low by about $0.50 now. If you look at our feeder cattle market, right now you have November up a dime at 146.35, and January up 90. The biggest mover is March up $1.05 today at 145.28. And on the lean hogs, earlier we had triple-digit losses in most contracts, and we still do. We have December down just 18 at 63.02, but look at February, down $1.25, and April is down $1.80. May down $1.83 at 83.20, and that one is at a $20 premium already to that nearby December. All right, let's talk first about the beef side here.
Okay.
You were talking about some interesting developments globally in the beef market. Maybe you can explain that to
Sure,
our audience.
a little bit. We're seeing a large increase in the 90s, the lean trimmings that we get off of grass-fed cows, off cows themselves. And we've been importing that from New Zealand and Australia at quite a heavy rate. Last week, we noticed we had about a $10 jump in those 90s, and now we're seeing to have another increase in them. And it appears that China, Japan, and Taiwan are taking a lot of those trimmings from us, not necessarily taking them, but they're outbidding us for them. And so now we're having a little bit of a slight issue trying to get lean trimmings in here in the U.S. at a little bit lower price, which will help our hamburger market a lot.
So when I was at the NAFB convention in Kansas City last week, the story broke that China was going to drop its restrictions on imports of U.S. poultry.
Sure.
How does that all play into the red meat market here on beef and pork now?
Well, I think it shows how critical of meat protein shortage that they're in, and where they are doing everything that they can seemingly to circumvent the U.S. from providing some of that product to them. But I think around the corner, we're selling products to countries that we are familiar to selling with, and then those countries are in turn turning right around and shipping them off to China. I can't prove that, but I know that we are still moving a lot in our export markets, but we're seeing the increases of prices here in the U.S. that is primarily domestic, more so than export.
When you look at the overall picture, I mean, from a global perspective, all countries involved together, I mean, that would increase the demand globally for the beef and the pork and the chicken.
For
right?
everything,
Or
for absolutely. And it's a huge deficit. So they've got to eat something over there, and we either provide them with products from here in the U.S. or they circumvent the U.S. and they get it from other sources. But we are still a large meat protein producer.
Got a little bit of a change in the spread on the pork today. Is that what that's about with the losses in the deferreds or not?
It's possible. I think it's still just the basis. The lean hog index just hasn't moved. It's still at 59 and change, and we see $20 and $30 premiums onto the futures. So I think it's just a basis move.
Okay. Thanks for coming in.
Yes, sir.
Always
Absolutely.
educational.
I
always
appreciate
learn something
that.
every time. So thank you very much. Chris Swift of Swift Trading Incorporated right here in Nashville. Janet, there you go. Learned a
As
lot.
always, thank you guys for the insight
Yeah.
today.